Good morning, traders. This is Michael coming to you from Game Edge on July 3rd, Thursday, July 3rd, with our pre-market prep session. As always, here at Game Edge, we'll cover our three pillars: sentiment, structure, and trend, as well as looking at the zero DT option structure heading into today and our trading plan for the shortened session today with the markets closing at 1 p.m. So moving on to our market trend model. As always here, this is based on the tick index. You can research that at your favorite vesting website. Quick takeaway is the tick index is based on buying versus selling of overall market participants. Our key indicator that we like to look at is this bolded white line. This is our CT, or our cumulative tick. If it is from lower left to upper right or in a upward fashion, that's indicating that market participants are buying more than selling. And then we like to look at the breadth indicator to the top. This new highs versus new lows. Obviously, the green line is new highs outpacing new lows. So again, significant buying accumulation in the overall market day over day, as you can see for the past few days. And then our filtered cumulative tick indicator, plus 1,000, minus 1,000. These are larger market participants, institutions. These are filtered obviously by larger block orders, and this continues the upside above the zero line, so more accumulation there also. And then just our regular tick is above the zero line and appreciating to the upside. And then our longer look back period, the red above cyan, the colored ribbon, you can see it's significantly appreciating to the upside with a positive slope. So again, on a longer term look back period, market participants are positioning for upside. So again, bullish overall. Just continues. We talked about consolidation yesterday, possible pullback, and then if we saw the CT continue to the upside, we would anticipate more price appreciation of the overall SPX, which is what we got yesterday. And then obviously the gap up this morning on the jobs number. So we'll look at the overall structure heading into today. Looking on to the SPXA, this is our cruise ships. Again, longer expiries. These are monthly expiries. These are larger positioning institutionals as larger market participants. We're called dominated above and below spot price. You'll notice the green net deltas basically through the whole structure and complex, as well as the net OI. Only two downside out of the money put speculations down at 61.65 and 60.85. So again, just two overall blips within the overall bullish structure. We'll see if those start to erode to the downside. Or if we do continue on with this significant bullish extreme on the SPXA, which is larger institutional positioning. You'll notice as we move to the July expiry, again, green net delta through the whole structure and complex, as well as the net OI. Net delta is spot price sensitive, net OI is not, but again, market speculation to the upside, 6,300. Seems to be targeting to the upside, as well as 63.50, as well as 62.50. So at least those half levels all the way through to the upside. To the downside, significant in the money call support, just being maintained by the overall structure. Again, so any pullback should be an opportunity to get involved in the overall market. As we move or pull back to the downside, 6,200 larger round levels noted by the gradient there of the OI. So again, unless the structure erodes after the next expiry or we see a significant change in structure or sentiment, we would maintain our bullish stance past the July expiry. SPXP, all expiries turned on, call dominated, above and below spot price. Again, you'll denote the green net deltas as well as net OIs through the whole complex. Again, any pullback should be an opportunity to get involved on the market or in the market with this look. To the upside, we see 6,300. That's obviously target to the upside. Not anticipating that we reach that today. We'll look at the zero DT structure and sentiment here in a little bit. But again, any pullback, we'd look for the overall market to bounce or an opportunity to get involved, especially down into these transition levels. And as noted, we only have two out of the money put speculation levels so far. Again, if these start to grow and we see an erosion of in the money calls below us, we'll start to see it in a couple other tools we'll cover in a minute. And then that would give us a little bit more cautionary stance, as out of the money put speculation to the downside would start to grow, in the money calls to the downside would start to erode, and that would open the door for a possibility for a little bit larger pullback. But as of now, not seeing any of that to happen. And again, we would note that day over day, and we would call those the first cracks in the overall bullish ice. But again, structure maintains its bullish stance through the overall SPXP full expiry option structure. Moving on to the GEX ratio, SPXP. This is kind of the first area of divergence I've talked about the past few days. Not necessarily bearish, but just something to keep an eye on. Price keeps appreciating, but our GEX ratio keeps falling, or at least consolidating sideways. So the GEX ratio is a put call ratio, but it's a better put call ratio because we add a time component, which is gamma. So again, we're seeing short dated call gamma just be stagnant as price continues to appreciate. Obviously, if price continues to appreciate, we'd like to see the short dated call speculators continue with the upside speculation driving price higher. But as of now, we're just seeing that stagnation in that call speculation. So this will resolve itself one of two ways. We will see price continue to appreciate, and the overall GEX ratio will start driving higher, indicating call speculators are coming into the complex, or this will maintain stagnant and start to drop to the downside, and then we'll see price begin to drop also as that out of the money call speculation starts to wane. So we'll keep an eye on this day over day. As we've said, this is just the first divergence that we're looking at within the overall option structure and positioning heading into today and next week. Moving on, the SPXP delta balance. Again, this is maintaining that the out of the money call speculation is staying above zero. In the money call speculation is staying elevated, and delta balance is staying up at 1. That's indicating call speculators are maintaining control. But if we move on out in expiries, we do notice that the in the money calls have a short drop here. That would be below spot price, and then the out of the money call speculation rises up, but then drops also. Again, just a short-term blip within the overall expiries on out in time. So again, we'll keep an eye on this to see if this changes and this starts morphing into something that looks like we're dropping below zero to the downside. Then obviously we'd be a little bit more cautious with price appreciation, and we'd start looking for possible pullback areas and areas of demand on the downside where we could have an opportunity for a pullback and then some supportive or demand type action within the overall option structure. But as of now, maintaining the bullish stance heading into today, as well as on out in time, and a possible short-term weakness heading into the 9th of next week. Moving on to the SPXP 0DT, I have two charts for this. I just wanted to lay out some gamma delta nodes we have below us. If we see any pullback, this could be an opportunity for a bounce area or always a parking spot area. We have transition here. You'll notice that our GEX or our PGEX is flipped with INGEX. That's because this 62.25, the short interest here, is flipping this put dominated and negative, as you'll see across the board here. So we'll continue to watch that area as a pullback area into an overall transition. Drunken sailor range, we notice 6,200. If we do see any pullback, that would most likely be a supportive area. You see very low exposure within this drunken sailor range. This will be driven by intraday volume analysis and volume metrics. That's why we watch our vol-m command in our tool to get an idea of where market participants are positioning for the day. To the upside, implied open was 62.50. We'll check that again here in a few minutes. We're not anticipating us to reach the 6,300 level. That's obviously COI, highest call open interest. But if we do get above 62.60, we could see us drive towards 62.80. And you see the call speculation dry up there between 62.80 and 6,300. So again, these are out of the money calls, so charm will continue to grow throughout the day. So we'd have to have a significant upside out of the money call speculation via the vol-m and intraday volumetrics for us to drive towards 6,300. We, again, looking at this transition area as a possible pullback area, an opportunity to get involved for a move back to the upside. And then if we drop within this overall transition and drunken sailor range, it could be very choppy for the day. So we'll continue to watch that as we move through the day via our vol-m, and then obviously market is closing at 1 p.m., so a shortened session for today. So here's our overall drunken sailor range outlined. Our arrows above drunken sailor range, 62.25 or 62.30. We'd be anticipating price appreciation up towards 62.50 and 62.60. And probably the cap up towards 62.80 again, unless we see a significant amount of out of the money call speculation. And to the downside, we see 6,200 again, just a psychological level and a large total OI, net OI positioning level via call OIs. So pull back to that area would be most likely a demand area that we look for a supportive type action into that area. And then below Drunken Sailor range, obviously still in the money call dominated all the way down. Would be a little bit more cautionary below 61.75, but again, should be areas that are continue to be supportive and an opportunity to get involved in the market, as long as the MTM model and the Vol-M model, are in confluence with bullish structure and sentiment. Moving on to the net stat command, this obviously just gives us the highest sensitivity strikes for the day. Again, as I discussed, we denoted those out of the money calls. The net charm on that is 6,300. Again, that's just a large right-hand plane integral. That will be a growing balloon overhead that most likely will be a ceiling of price appreciation. And we see that right-hand plane strike at 62.60. That's the highest sensitivity level for the out of the money calls. That's why I discussed that level. And then we'd have to just see a large amount of out of the money call speculation above 62.60 to drive us up towards 62.80. And then you see just that left-hand plane strike, a massive amount of in the money calls below us. Again, will continue to be supportive on any pullback for the day. Heading into the open here, just a few levels to note. Obviously, pre-market here, it looks like we're 62.43, so 62.50 would be that first level to overcome, and then we'd be long towards 62.60. That would be the first area we'd probably look for profit taking if we take out that pre-market high, as well as that 62.50, that Keys high sensitivity level. We see IWM finally pulling back. We see plus GEX there at 225. Historically, plus GEX has been an area where we can see some price interaction and most likely calls taking profit into those over areas, as well as COTMC, where those out of the money calls become in the money. So those two levels right there, we'd anticipate price action and possible pullback from that area. We see that we're going to open above COI and PTrans on Qs. So a pullback towards 549, 550 would not be out of the question. And obviously we see COI or plus GEX up there at 560. So that would be an area to the upside where we'd most likely see some stalling. And then SPY plus GEX 625. So again, that area would most likely be a cap on price unless the structure continues to move up above transition levels. So again, those will continue to be supportive on any pullback. So quick takeaway is heading into today, bullish structure, sentiment, and overall trend. Nothing's really changed there. Transition areas, we'd look for pullbacks. Drunken Sailor range, we look for choppiness above 62.50. We'd be looking for longs towards 62.60 and then 62.75 with referencing our Vol-M command, and intraday volume metrics. So with that, I'll be around for a couple more minutes. Thanks everybody for joining us. I hope everybody had a great week. Hope all of our posts and education material was valuable for the week. We'll look to do it next week again, and then watch for our weekend newsletter where we provide just an overview of our philosophy. We do a deep dive into options analysis, as well as certain overall education content and materials that we like to put out for our members as well as subscribers to the newsletter. So if anybody has any questions this morning, let me know. Just post it in the chat, or if you want to see any single stocks, we can go over those really quickly. But thanks everybody for joining us. Just remember, it's a shortened day. Can you check NVIDIA? Yeah, I'll check NVIDIA. Shortened day within the overall market. We closed at 1, so maybe anticipate some quick price action at the open. A little bit of volatility back and forth, and then possible consolidation and overall dropping of OI, as well as volume heading into the day. All right, looking at NVIDIA. Checking out NVIDIA here. Call dominated above and below spot price. How we go through this systematically. We look for transition, which is very wide on the overall full expiry. I'll check out the next expiry next week. We see PGEX at 160 and COI at 160. Obviously, that would most likely be a cap on price unless we see the structure continue to advance. You see 165 up there, significant amount of net delta. So if we do get through 160 and the structure advance, 165 would most likely be that next level. Just a large amount of call domination above and below spot price. So any pullback on that would be an opportunity to get involved in NVIDIA. Here's the 7/3 expiry, so maintaining the same 160. That's PGEX and COI. Next expiry 160, so nothing really changes. Structure, and then we see 18th, the structure advances to 165. So again, appreciation up towards 165 would most likely be the direction of the overall move, call dominated there. So let's check Apple. So we continue to do this over and over systematically. First thing I look at is where we are within the overall structure compared to transition. Are we call dominated? And how's the structure look? So PGEX 215, COI 230, highest call open interest. So price appreciation up towards 230. You see COTMC, that could be an area of profit taking. But again, structure advances nicely. Let's see, 7.3, 7.11. I'm just watching to see if the structure advances PGEX and COI. 225, 215. So 225, 230 would be the area of price appreciation I'd look for the upside. Call dominated above and below spot price. Any pullback towards the transition area would be an opportunity to get involved in Apple to the upside. So it looks good, call speculation wise, and to the upside. Patrick, SQQ, we don't necessarily use the leveraged ETFs for the option structure. Even though the total OI meets it, but you see how the option structure, options on leveraged ETFs are not really conducive to dealer control or dealer metrics. So what you'd want to look for is Qs, and then if the Qs are call or put dominated, then that's where you would use your leverage ETF to get your directionality. That's, options on leverage ETFs are not a good overall structure to look at. I'd prefer to look at the underlying. And then look at that option structure and then base my trades on that, if that makes sense. We do not have futures data. We use the underlying NQ or Qs, or however you want to look at that. Yeah, Patrick, yeah. The options on leveraged ETFs are not usually good. Yeah, we don't have, Marcos, we don't have futures data. We use the SPX, and then we convert that to the ES. So we can take a look at QQQ, Patrick. I mean, obviously that's, pretty much what SQ is based on. So yeah, NDX works in, oh, that's what you want to look at. I thought you said NASDAQ futures. Yeah. Okay. Yeah. No, we can look at NDX. Yeah. Yeah, Patrick. So Q's call dominated above and below spot price. PGEX 555. Any pullback, obviously looking to get involved on Q's if you can. COI is at 550. You'd like to see that structure advance on out in time. You see COI drop with this expiry, and then COI is at 555 on out for the 7th. Obviously, these are daily expiries, so you can just go through there. 560. So Q's look strong. I would not be trying to short the Qs because SQQ is inverse ETF for the Qs. So I would not be trying to short the Qs at this time. So very, very strong and call dominated. So NDX, yeah. So the problem is the total OI with the NDX. This is not conducive of dealer control. So that's why we don't look at the NDX in the web app. Same thing. Your total OI is not conducive of an option structure. So we can't really use dealer metrics or our tools to monitor that. That's why we always say make sure you look at the OI, because if it's a newer issue stock or a meme stock, it probably doesn't have the amount of total OI or dealer control, dealer metrics, hedging that's happening within the overall structure. So again, that's why we look at it. So. All right. NDX and SPX are closely correlated. Would you say I could just use that instead for reference? They're two different instruments though, right? So I would not suggest that you use the SPX for NDX. They're just completely two different instruments and what they're looking at. So that would not be my recommendation. So. Yeah, you're welcome, Mosey. All right. Thanks, everybody, for joining us. Everybody have a great holiday weekend, and we'll see you back here next week. Thanks.